It is not your fault that you can't make money trading stocks. It is simply the outcome of millions of years of human evolution. Humans have become hardwired to be much more emotionally affected by losses than by wins. This is not a psychology video teaching you how to control your emotions. I'm not a psychologist. I don't know how to tell you to do that. I am, however, a profitable trader. So today's video will be covering a handful of tips that I have learned in my 10 years of trading experience that you can use to still make money in the stock market even while these emotions are firing in your head. The goal is not to eliminate your emotions, it is to not act on them. Answer this question. How often do you add to losing positions? Meaning maybe you enter a trade and the position starts to go against you, so you add to lower your cost basis. Also answer the question, how often do you add to winning positions? When you get into a winning trade, how often do you average up in that trade? The answer for almost every single beginner trader will be that they often average down into their losers while almost never averaging up and buying more of their winning trades. Real proof using code. What you're looking at right here on the chart behind me is my runner's large cap continuation strategy. Essentially, it buys high and then looks to sell higher. You can see the performance statistics of it from my custom built backtest labels here at the top of the chart. What I'm going to do is I'm going to turn on another strategy that I have created called the add ATR strategy. I'm going to add this strategy 3 times. That is going to allow the strategy to enter and to scale into positions up to 3 more times if the stock is strong. Exactly what it's doing is if the close is greater than their entry price plus the ATR value, it will enter another position. If you don't know what that means, just know that when we are in a trade and the trade is strong, we add to our positions. Notice what happened to our total P&L and even our other statistics when we did that. We went from like a $30,000 total P&L up to $117,000. Once again, just once we are in a winning trade, if that winning trade begins to show strength, add to our winners. I have also built the opposite of this add strategy. I called it my add ATR down. What this is doing, once again, the exact opposite, is it is adding if the current price is less than our entry price minus the ATR value. So essentially, once again, if you don't understand that, just know that this strategy adds to losers. Once again, keep an eye on the statistics. As I hit apply here, the add to losers strategy, as you can see a couple of ads happening here, a couple of ads happening back here during some of these trades, makes the P&L drop all the way down from 117,000 back down to all the way to only 37,000. Working proof that adding to your winners is a better answer than adding to your losers. We talked earlier in this video how the human brain through millions of years of evolution has gotten to the point where we receive a larger emotional reaction from losses than we do from wins. Well, that leads then to the sunk cost fallacy. This is the idea that once humans have put something, be it money, time, effort, anything, into something, they are much more likely to see it through. That is why beginner traders add to losing positions. This trade that's happening behind me here happens millions of times a day amongst beginner traders. Oh, the stock is really, really strong. It's meeting my entrance criteria. Let's go ahead and enter the trade. Oh no, it's going down against me. That's okay. It's got to bounce back. It's going to bounce back. I'm just going to add to my position. Still coming. Okay, we're just going to add. It's definitely going to bounce back. Okay, we're going to, oh, okay, you know what? Fine. I'll get stopped out of this trade. In this trade, you end up losing something like $2,800. I can't do the math. Something like $2,100 you end up losing in this trade when you were only supposed to, if you didn't add to your losing position, you were only supposed to lose about $800 in this trade. So you have basically tripled the loss on this trade, all because of loss aversion and the sunk cost fallacy. Remember our quote, it's not about getting rid of these emotions, it's about not acting on them. You're never gonna not feel loss aversion and the sunk cost fallacy. Remember, millions and millions of years of evolution going on up in here. But we can take certain actions in our stock trading to still be profitable, even with all that going on up in the old noggin. Step number one, we've basically already covered throughout this video, and that is codified backtesting. This helps to serve two functions. The first one, once again, we've already basically gone over throughout the intro of this video, and that is proof and strategy optimization. I utilize codified trading strategies to prove to you that adding to winners is more profitable than adding to losers. I was able to do that very, very easily and very objectively proven via using code. Also, it provides you with the backtested statistics of your strategy, which is going to amazingly, trust me, this changed my trading forever, but it's just going to amazingly increase the confidence you have in your trading strategy. Very often, beginner traders end up losing or adding to their losing trades, should I say, as we showcased earlier, because they're just not sure if they got the right first entrance. They're not really sure in what they're supposed to do in their trade. So they're thinking and they're doing all this like live charting and they're redrawing lines to make themselves feel better about why they're buying, etc., because they don't have the confidence in their strategy. Backtesting in this way with these statistics gives you that confidence. Guess what? This strategy only has a 37% win percentage. I'm wrong very often when I trade this strategy, but because of my backtesting, I know that if I continue to follow the strategy to a T over time, that it will be profitable because the average win to average loss ratio is so high. So I know exactly where I should be entering, where I should be exiting. I know I am doing the right thing as long as I follow my rules. Even if the trade loses, it's all about doing the right thing in this game. Quickly, before we move on to the next steps, if you are interested in this sort of codified backtesting, the strategy and the ad strategy alongside the backtest labels, all that you've seen in today's video, are all available alongside over 150 other custom thinkorswim codes over on my website, daytradingstrategies.net, which is linked in the description down below this video. Right now, you can even go access a handful of free codes. At least go check out the free codes, but just to show you how easy it is quickly, every single one of the 150 plus codes on the site comes with one of these TOS share links. All you need to do is copy that URL back within your thinkorswim, set up in the top right, open shared item, paste in that URL, preview, and import. I just imported a study, so now I can simply open it just like I would any other study, the DTS price action Momo buy, turn it on my chart, and just like that, in about 3 mouse clicks and 5 seconds, you can have any of the 150 custom codes that I have created and published over on my website, saved locally and forever within your own thinkorswim platform. Once again, the website is linked in the description down below. Go check it out. Go at least take advantage of the free codes. I mean, why not read the reviews while you're over there and decide if it's something that could help accelerate your personal trading journey. Step number 2 of becoming a profitable trader, despite all the human evolution going on up in your noggin, is to sell your losers to fund your winners. I've already proven to you, and I've actually gone ahead and turned it back on, that adding to your winners is a great way to help increase your total P&L. Remember, I also showcased that adding to your losers made your P&L worse. And what almost every beginner trader does is the exact opposite of what I'm explaining here. They will be, maybe they're up in 5 positions and they're down in 5 positions. What they end up doing is they trim those 5 positions that they're winning on to go buy more of the 5 positions they're losing. Once again, because of the sunk cost and loss aversion fallacies that are going on up in the noggin. What you need to be doing is the exact opposite of that. Just sell the losers. Just cut the loss. It's okay. Guys, it's okay to be wrong. You are going to be wrong a lot in this game. I'm a profitable trader. I've been trading for 10 years. I'm wrong every single day, multiple times a day. I'm wrong. The goal is not to ever become some sort of stock prophet that always knows what's going to happen on the charts. The goal is proper risk management and the correct psychology to stick to that risk management. That is what we are attempting to help teach here. So just work on trimming the losers to fund the winners. Yes, I know it hurts, especially like when a stock looks like this, right? Say this was the current state of this ticker. Well, Trey, I don't want to go buy more of this ticker. Look, it's trading at local highs. It's super stretched. It's obviously not going to continue going. It needs a pullback. That's what we always tell ourselves internally to avoid having to go and add to that winner, because we don't want to. We don't want to go add to that winner. We want to take this win. We want to just lock that profit. We want to just feel that victory. It's not about feeling the victory. And we're going to talk about that more in step number 3. And maybe I'm getting a little ahead of myself, but it's not about feeling that victory. It's about getting what you're supposed to get out of your winners according to what you back tested works over time. So cut the losers, add to the winners, and let the winners ride. The worst advice that is given to beginner traders constantly is that you can't go broke taking a profit. Because yes, you can. You will. If you're cutting the heads off your winners too early, you will go broke. What did I just explain? The goal is never to become some sort of visionary that knows what a stock is going to do. Nobody knows what a stock is going to do. I don't care if your name is Trading Stocks or Warren Buffett or Elon Musk. Nobody knows what a stock is going to do. They never do. They never will. They never will in the future at any given point. Once again, the game is risk management. And whenever risk management is brought up, everybody thinks of stop losses, which, yes, is half the equation, but the other half is the reward. You also need to be getting a large enough reward to be profitable alongside your win percentage. There is 2 parts of a profitable strategy: the win percentage and the risk to reward ratio. So alongside stop losses, you need to also be getting the correct rewards out of your trade. So all of this leads in to step number 3 of becoming a profitable trader, despite all the loss aversion and sunk cost fallacy going on in your head, and that is to stop selling your winners early. You need to hold on to your winning trades and only exit where you have proven is profitable in your back testing and subsequent forward testing that you should be doing before sizing up into a strategy anyway. But you cannot sell your winners early. Way too often, beginner traders are taught to scale out of their winners. I'm not going to say that scaling out of your winners is always a bad idea. If you have run a back test and you have proven that at specific areas you should take half your profit off or whatever it is, that's perfectly fine. Then of course do that. But that's not normally the answer, right? That's not normally what's going on. Normally, someone enters a trade at $400 a share. Their profit target is $450 a share. When it goes up and it hits $425 a share, they take off half their profit just because they want to lock it in. They want to walk away from the trade feeling good no matter what happens. That's awful. Now, when the trade inevitably goes to $450 and they get to lock in all their profit, they have cut off over half. I don't know if over half is the right. They've cut off a lot of what they were supposed to make out of that trade. Unfortunately, once again, not your fault, but because of the human evolution, the beginner trader gets to 450 even after cutting the half their profit at 425, and they are just as happy emotionally as they would be if they let the whole position ride to 450. And they tell themselves like, oh, I locked in some of my profit. I'm happy I did that. Now I got here and I get to take the full profit. No, you don't. If you were supposed to make $1,000 in that trade and you only made $650, that's very bad. That is very bad risk management. You are not getting what you're supposed to get out of that winner. And guess what? Inevitably, you are going to be wrong. Once again, over and over and over again, you're going to be wrong. Stopped out of a trade, stopped out of a trade, stopped out of a trade, stopped out of a trade. It's going to happen. It's never not going to happen that you have a 100% win rate strategy. So that's why it is so important. I'm just going to keep repeating myself, but you need to hammer this home. Write it down, put it on a sticky note, stick it to your computer. Stop exiting your winners early because you are ruining half of the risk management equation, which is all that matters in trading. I mentioned Elon Musk's name in that last clip, and it actually made me remember a post of his over on the website he now owns, X, that perhaps the obvious conclusion is that accelerating the GDP growth is essential. The only radical improvements in productivity can save our country. Now, I'm going to not at all touch with a 10-foot pole the politics of this post, but what he's saying, what the richest man in the world is saying, is that it is better to focus on making more money than it is to cut your spending, or in our case as traders, to cut your losses. So once again, wrapping up this third point, make the amount of money you're supposed to make. Focus on the money making. That's what really matters. That's what we're all here for, right? To make money. Focus on that rather than being scared of losing. Codified trading will change your life forever. That much I guarantee you. If it doesn't, we do have a 30-day money-back guarantee over on the website. All you need to do is reach out to me under the Contact Us email link. I'll get you your money back. But right now, you can go sign up and get access to, once again, all 150 plus codes for only $45 a month. I have it set up as a subscription service because I am always adding every single week. I add and update codes on the website. There's also an annual plan, which obviously will save you money, but even more importantly, gets you lifetime access to the Discord, which is full of people using these codes. So it's multiple eyes on the market at the moment I'm making this video. I think we just crossed like 75, 77 users or whatever it is in the Discord. So that's a lot of eyes watching and talking about the market, as well as going over what they find is working best for them in coding. Anyway, daytradingstrategies.net. Once again, the link is in the description down below this video. Go check it out, go read the reviews, and if you think it's something that could help make you a better trader, then go ahead and sign up today. So your 3-step plan. Step number 1, use codified backtesting to gain confidence in your trading strategies. Step number 2, sell your losers to fund your winners. Step number 3, stop selling your winners early. Hit the like button if you learned something in today's video. Make sure you subscribe to the channel if you would like to continue learning, as I'm posting 4 videos a week for free on this YouTube channel. With all that being said, I'm going to sign out of this video. However, the YouTube algorithm, pointing the wrong way, thinks you will like this video a lot right here. And the algorithm is pretty damn smart, so why not go check that one out next if you have the time.